Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Monday, April the 16th, 2012. Before we get into looking at the individual markets that we're going to be looking at today, I wanted to give you guys a kind of an overview of the main issues that are causing the markets to sell off right now. So you have a better understanding of what the deal is here. What we've been talking about in the past has been the pigs, basically the European countries that have gone way too far into debt and they can't actually support that debt anymore. So they've been struggling, and we've seen the market crash over issues with Greece that have keep flaring up again and again. And we've finally seen Europe deal with that to a degree so that it's on the back burner, so to speak. But now we're talking about Spain. And as you've probably heard, Spain's a bigger problem than Greece. So let me show you exactly the difference here between Greece and Spain. When people talk about the difference between the size of the problem in Greece and the size of the problem in Spain, this gross domestic chart here, the gross domestic product of each country compared to one another, allows you to actually get a good picture of what's going on. And this tool here is actually linked on our free website at PerfectStockAlert.com, so you can check it out for yourself and compare any countries you'd like to. But you can see that Spain is a much greater problem than you have with Greece and Portugal. Basically, now that Greece has been dealt with to a degree, or for the time being, bondholders and bond traders have actually moved on to start bidding on Spain, believing that it's not going to weather the storm any better than Greece did and will eventually need to be bailed out. Then I totally agree with that. That argument is very sound. Right now, Spain is talking about that they believe that they might have tipped back into recession. And there's something you should know about that. No government actually ever comes out and says, hey, we're in a depression. And they don't ever say that, and that's just how that is. So what you can do is look at what a depression was in the United States back when we had one. And remember, the United States didn't announce it was a depression until well after it as well. But during the Great Depression that we had back in the U.S., unemployment rate was at 25%. In Spain right now, that's what you have, is an unemployment rate of 25%. If you are 25 years of age or younger, the unemployment rate jumps up to 51%. That's a depression, in my opinion, and based on what we've seen in the past, that's what we called a depression in the U.S. I can see that logical argument that, in fact, we are seeing a depression in Spain, and so there are going to be needed to be bailed out. However, as we talked about this in the past, what's basically going to happen is Spain's not going to be the end of it either. Now, they've had a heck of a time just getting this little guy dealt with. Dealing with this one's going to be that much harder. And even if they could deal with it, which I don't believe they can, but even if they could, you still got to worry about Italy. Let me show you what that looks like. Now that you can see the entire picture for yourself, you understand where Greece stands compared to Spain, and now where Italy stands compared to Spain, you've got a better idea of the problems and how they're not really going away. We're just growing. We're seeing that fire that started in Greece actually start to spread now to Spain, and the problems are ultimately, in my opinion, going to cause the euro to break up. But until then, it's just something that you should know what's going on out there in the market and what's going to be driving your market. This will be driving your market. This is why you're seeing the Europe markets that we've been tracking falling apart. And this, like I said, that's the leading indicator for the U.S. They've been basically following the European credit crisis one step after another. Okay, now let's get on to the markets today. Let's start off looking at the Dow Jones Industrial Average. This one made a run for the peak that we've previously seen here. We saw this big sell-off here. We saw a bounce here that happened. We told you we did not believe this was the bottom, and we wouldn't be a buyer here. She rolled over at this point, and now we said, okay, we'd start shorting. So that means the very next day, which is today, any activity in this here range would be a sell opportunity. And we did see a move up here to test that previous high and came really darn close within pennies, but did not break out. So you've not been stopped out. You are still short, and you should continue to be that way. I see no reason to be a bull here. This is another attempt at this high point here at the 50-day moving average, and it has failed. That means that the 50-day moving average is acting as resistance, and that happens when? That happens whenever you get a bearish market, not a bull market. Bull market, you will find a situation where you find support and off the 50, and that's typical. Whenever you get a situation where you start to break through, closing below the 50-day moving average, you're starting to see a breakdown of that trend. And when you come up to it and you start finding resistance there, it's just confirming that they're having a breakdown of the trend. So yes, 100% bearish in this market. Quick look here at the NASDAQ. You can see basic overall same story as we just saw with the Dow Jones Industrial Average. However, this one was much more bearish, and it's important to note that whenever you see the NASDAQ breaking down like you are, because the NASDAQ has actually been leading the market higher for some time, and it's now the strongest one of them is actually giving up their bullish sentiment real quick. What you had here, again, the same overall story we talked about before when we started shorting it. You had a breakdown of the overall trend. Come down here, bounce off the 50-day. We said that we didn't believe this was the bottom and this reversal was not a buy opportunity. We watched it for a couple of days. She reversed on the third day. We said we start shorting it. Today she gaps up a little bit into that level you could have been shorting there, and she starts moving lower. The thing to note here is that she goes lower. Whenever she pierces like she has here, it's a preemptive warning that you're going to break this little trend that you've drawn right here. So this little support, well, it's a resistance line right here. It's actually been acting as support. Well, you're going to break through that. You're going to fall below that. That's what this chart is showing you. And it's very, it can be used as a leading indicator for the other markets as well. So I would not be bullish in the U.S. markets, and obviously I wouldn't be bullish in the European markets. They've already broken down. So yeah, I would stay short. This trade is working out very well for us. We're making plenty of money on it. Continue to maintain the stop as where it is. I will update them every single night as they are updated on our free website at perfectstockalert.com, as we do every night, and we'll update the new opportunities that we see as well as advancing any stops. But for the moment, I'm not going to advance any stops. We could actually trade around in here for a little bit before we actually get the breakdown. I'm not for sure, but we're going to break down immediately. But right now, it looks like everything is holding on the short side, and it's a much stronger position to be in based on the charts than it would be attempting to be long. Now, if you did see this, let me clean this up a bit. If you did view the market reversal that we saw a few days ago back here as a bullish opportunity and being a buyer, your stop would have been triggered by now. Either you set it out here and it was stopped out earlier today, or you set it off of this low here. In either case, you'd be stopped out. You should not be long these markets. The Russell 2000 Small Cap Index, today's candlestick activity basically is spinning top situation you have right here. It's not a bottom either. It's trying to find some support here based on this was the previous support that you come up here, sold off, found a low point there, and now it's trying to, after it's made this move here, sold off again, trying to bounce around in this range and pretend there's a support here. However, the problem with that argument is this right here. You've already broken that support line, so it doesn't really exist. We're playing at it, but it's not really going to hold, especially with the markets pulling the rest of Europe down and so forth and so on. You're going to see this guy break down as well. What I see on this chart when I look at it, let me clean that up again. Whenever I look at that, what I see is this first leg to the downside may have actually started here, moved to the downside, and then you get this basic little sideways moving flag pattern going on. It's just the middle move before you eventually break down again and go lower. This would be the first leg. This is the middle measured move, and then this is the second leg to the downside. It should be the equal distance of the first one. So there's a big move to the downside still coming. The S&P 500 Large Cap Index, same overall story I've just shown you on the Russell, only this one has not actually broken this trend right here. However, we've already mentioned we don't believe this is the bottom like we've shown you on all the other charts because there was no hammer candlestick formation here. It was actually just a bounce, but you bounces over, you roll back over, and now you're going to take this level out, and then you're going to challenge this level. And if the other global markets can't hold this level, and you can't see that most of your U.S. markets, then you're not going to hold it in the S&P either. You're going to break down to the go lower, and eventually, if you are long this market, you don't want to be. But if you were, your stop is either right here where you have this low point. Is either right there, and if you get stopped out there, you definitely want to be out of this market. You're really fighting a trend when you're trying to be long this market right now. The last chart I want to look at today was Canada's market, the TSX, the Toronto Stock Exchange. And there's something you should note about this. Whenever we've talked about this several times, but here you've got this previous shoulder formation, the head formation, and the last shoulder formation, and closing below the neckline. Here's the blue dotted line will be the neckline here. Close below that, and that confirms that you have a head and shoulders pattern, which is a major peaking signal for the market here. And we've seen that same pattern form in several European markets as well. So now that you have this confirmation, we talked about this before, you get the sell-off, it continues, we follow our stop. This blue line here was our stop. We were eventually stopped out in this market bounce. And we said, watch this neckline. If she starts acting as resistance, you can have another move to the downside here, and then you get a break above it, but then she sells back below it, and now today she comes up to it and shies away from it. She's now finding resistance on that neckline there, and that's an important signal for you guys. So I would definitely be entering this on the short side with a stop set off this high here, this 230 line. That's where the high point of this candlestick, that's where my stop will be set off of 1 cent above that, and I'll be stopped out. But otherwise, I'm going to stay with the trend and trade to the downside. Lower series of highs, lower series of lows. This market's in a downtrend. Trade with the trend, not against it. If you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend, aka share our videos online. For those of you who are looking for that gross domestic product chart, comparison chart that I was showing you earlier, you can go into the market analysis, click down here on the research tab. You'll get a drop down of a bunch of different options here, and that's what you're looking for right there, okay? Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.